Sergei, tell us who you are.
I'm Sergei Polevikov. I'm actually on the board of Health2Tech. We organize events like this. Alex mentioned like 20 cities. I actually just came from Europe. We did a couple of events in Lithuania, so it's like trying to unite local communities, medical communities. So I think it's a great mission. So thank you guys for coming. What else? I also run a startup in digital health called Well AI. Now we merged with Chart2Chart. It's another company. We provide virtual platforms to patients and physicians. I do podcasts with Alex, as he mentioned, and I have a Substack. So if you guys didn't subscribe, please do so. I do very provocative commentaries on AI products and AI companies in healthcare. Sometimes generate some public criticism, but it's all good. So thank you for coming.
You know that means you're an influencer, right?
Don't say that.
The next time you introduce yourself, you say, "Hey, I'm Sergei. I influence for a living."
No, don't say that.
You may recognize me. I have been a longtime health tech research analyst. I have probably spammed half of you in the room, so I apologize in advance for that, but I have moved over from the dark side and I'm now doing a bunch of advisory for health tech startups, folks that are looking to try to navigate all of the difficulties that I used to judge on the other side. Nix and Six.
Hi everyone, good evening. My name is Guy Milhalter. I'm a partner here at Pearl Cohen. So thank you again for joining us and for visiting our office. Some of you have seen in several previous events, so welcome back. I am a tech transactions lawyer and a licensing lawyer. I work very closely with technology companies on anything related to commercializing their technologies, and I work very closely with med tech, health tech, digital health startups as they start to expand and to actually try to get their technology out there. So I regularly negotiate with hospitals and various other enterprise customers. So kind of I've become familiar with the ins and outs of the issues that a lot of you on the tech side have to face. Just I'm seeing it from the legal side. Looking forward to this discussion.
Thank you, and thanks for hosting us. Super excited to hear some of your thoughts from the legal perspective about some of the news that we selected for today. But as I started, let's ask Stephanie, there's one more, there you go, to give us a short overview of some of the public health company earnings and what's happening in that space. Please tell us.
I just can't escape the public markets, huh?
I know.
Actually, I had a gentleman from the Wall Street Journal call me yesterday for comments, and I was like, I'm just a stranger now. I'm just a random person, so this is some random person's thoughts on health tech, but how about it? So the majority of health tech earnings, as you know, are in May. It's a little bit PTSD for me, and we had Teladoc kick it off at, I think, end of April, and then Viva reported last night, so we're finally done with all the different health tech earnings. What really surprised me about the moves in the space of the past month is that you saw a giant bid for all of the software names, right? If you've looked at your PA, you've looked at your account, you've seen a lot of software names have kind of had big upswing as the SaaS apocalypse is over. But digital health got very beat up during the whole, software doesn't need to exist anymore, AI is king move. You haven't seen any move backwards for digital health. It's still largely depressed. You've also saw a huge dispersion in moves. I look at T+1 a lot. That's how stocks trade the day after their earnings report. So you can see kind of how the market's accepting it. the majority of the names in the space saw a double-digit move, so over 10% up or down. And that kind of really is obscured when you look at the average returns in the space, which is about flat for the quarter, because everything's either up 10 or down 10, so kind of nets out to zero. The last thing I thought that was really interesting as a broad thematic trend before I go into the names on the screen is that you're starting to see share repurchases. That's when a management team says, our stock is too cheap, and if you're not going to buy it, we're going to buy it. And we saw some pretty big repos. Health Equity, I think, approved $1 billion one. That's a pretty big vote of confidence of our stock is not at the right place. You saw Progeny, they approved a $200 million one. I think they did over 100 million of buybacks in the last quarter alone. So we're probably getting near the bottom of where we should be, or hopefully, fingers crossed on the equity side for my equities friends. So this is the 5 biggest moves in the space. First are Hinge and Omada. I like to start with these because this is just a tale of two cities. They came public around the same time. They're both digital health names. One does more of a general movement, right? One does much more on the weight loss space, not unrelated. They both beat and raised. They saw a positive up 10% move with Hinge and a down 10% move for Omada. So it's just, you could not see a bigger bifurcation despite these being very similar names with very similar kind of outcomes. I thought maybe the growth was very different. Both had over 40% revenue growth, so poor Omada. I phoned a friend for this one because there was such a big delta. I had to ping a buy-sider on this, someone who's at a hedge fund right now, and his view is the big difference is you have about 30% EBITDA profitability over at Hinge. You have break even over at Omada, and so it's a pretty big lesson in coming public. You want to be profitable. Otherwise, I think the street discounts a lot of what you do. One of the most surprising moves for me was Progeny. I have been hearing on the private side of the market very tepid growth in the fertility players. You haven't seen a ton of movement over there. But Progeny was able to kind of prove to folks that a good guidance is better than actually having really good growth. They grew their revenues 1% in the quarter. Stock was up, I think, over 20% because folks thought it would be far worse than that. It's growing through a huge headwind because they lost the Amazon contract. That's been a big growth through for them, but shows that discipline is really key. If you're going to have a conservative guide when you come out, you can cover up a lot of sins. Now, Doximity, I think, was the most negative move in the space this quarter. It was down 20-something%. For that one, you saw a full year guidance miss. It looks to be an investment year. The profitability is going to be weighed on. I think the big debate here is you have a new CFO. Is this a new CFO kitchen sinking the guidance? Or is it that AI investments are important? And I had this debate today with an investor. All of the AI companies are making some pretty major investments, right? We wouldn't ding the Anthropics of the world for raising more dollars and spending more. But it's just tough to be a healthcare-facing name because they don't get the same grace that a lot of the tech-facing names really get. Finally, we got HIMSS. This was the last of the double-digit moves upscale. Miss a guidance cut, and it's on profitability. That upswing they had on compounding for GLP-1s, they're now moving to branded GLP-1s. Not good margin. So I think the big question is when the margins are going to start bottoming out. What's interesting from them, a lot of commentary in the call was around peptides. That's a huge opportunity for them. They have these compounding labs, right? There's probably a huge ability for them to grow a lot of this peptide business. I think they're afraid of being a first mover. They said don't expect it anytime soon. But we have really shifted as a society from, I'm not taking that vaccine, I don't know what's in it, to, oh, make me skinny? All right. I don't care where it's from. So we could maybe see some opportunities there. But that's your earnings roundup. Let's move on to another segment.
Unless you guys have any comments about SaaS apocalypse.
Yeah, I have a comment.
Always.
Just a follow-up question. So with this miss for HIMSS and HERS, I don't know, one story maybe that, a lot of this sort of digital health companies that had nothing to do with GLP-1s all of a sudden kind of jumped on this wave. And so I'm just curious. Do you think like this is like a temporary miss? Because there's a lot related to their GLP-1 business. Is it because it's so volatile? Maybe I'm just gonna go as far as say maybe it was a mistake for them to pivot that far because they were doing so well in other segments. Just curious about your opinion.
I would say at its core, Hims and Hers is a consumer brand company more than anything else. They're very good at advertising to folks. They're very good at distribution. There's nothing hugely differentiated in any of their products. If you look at the numbers they put up, their revenues beat. Branded GLP-1s are more expensive, but you did see a miss on profitability just because branded GLP-1s are expensive.
Yeah.
I don't think it's the wrong move to go into GLP-1s and kind of pivot your business model when there's a giant wave. The same way I don't think it's the wrong move for them to kind of pivot into peptides. I do think it's a cautionary tale for public companies that have more flash in the pan dynamics, right? You're going to have a lot of trends inherently in consumer. Look at anything in consumer tech. If you were a Peloton investor, you were very happy, then very unhappy. If you were an Allbirds investor, you were very happy, then very unhappy, then an AI investor after that, so who knows? But it's a fad business.
Yeah.
I'll just add to that. I do think Hims and Hers have a lot of really cool tech products that not a lot of people know about. For example, I interviewed their VP of all mental health services, and they built this amazing AI tool to match the treatment for different cases in psychiatry, and they like improved the quality by at least I think 70%. So unfortunately they cannot make tons of money on that and nobody knows about it, and that's why you have to sort of go into GLP-1 space. But I'm very bullish on this company overall. I think they're doing on the background a lot of amazing tech side as well.
I'm always a little cautious when you have a business model that's like a little illegal, right? And like I know a lot of tech is always a little illegal, like Uber was a little illegal, Airbnb, a little bit illegal, you know. We're all using plagiarism machine now as our favorite new tech company. But going into compounded GLP-1s, it was never going to be sustainable, right?
All right, let's move to our first news. And I personally think it's super important. In January of 2026, all social media were talking about this pilot of Doctronic in the state of Utah, starting this great project where AI can autonomously prescribe, renew prescriptions for, I think, 190 medications. So this is like the first baby step when we actually can outsource decision-making to AI in healthcare. And that's why everybody was talking about it. And finally, a few days ago, we learned some of the results of some initial results of the pilot. So AI recommended renewal in 72% of cases. Physicians agreed with the AI recommendation in 91% of those cases. With the second review, agreement rose to 97%. So basically, in 3% of cases, neither clinician agreed with AI and the decision that AI made. I think it's a huge step of building that initial trust to AI systems, and I think many more pilots like this gonna come, hopefully in New York as well, not just in Utah. I don't know really, who knows why Utah is so innovative in this space, because this is not the first pilot they're doing on the AI side. But I think this is great news for all tech community, and I'd love to hear your thoughts on this.
Well, of course, my thoughts when I hear about those kind of pilots immediately goes to like the 1% or the 0.5% or the 0.001% that perhaps went wrong and not necessarily went right. And so, you know, one of the things that I wonder with those kind of pilots is where do you draw the line between fully automated systems versus human intervention, and where does the intervention come into play? And, you know, just speaking very generally, not specifically about this particular pilot, I think for a lot of the people here who are developing or thinking of developing technologies that are intended to improve health outcomes, because ultimately that's everyone's goal, the question has to be, are you intending to retain the clinical judgment of human beings in the process? And if so, how do you do it, and where does that fit in the process? So I'd be very curious to see about this trial, this pilot, and others. Where do they land on this eventually?
So this kind of goes to my view that all good tech does start like a little illegal, right? I get there's healthcare. We have to think about the edge cases and where things go wrong. But we're also a community of folks that have great access to healthcare. I think we have to think about the folks that are waiting for their prescription renewals. When we look at different AI solutions and we say, is it better than a clinician? The question to me isn't, is it better than a clinician in an academic health center, which has some of the best clinicians in the planet? It's, is it better than not seeing someone? That's what you're dealing with in a lot of rural areas. So I'm a fan.
Of course, I'm not sure that, this is a conversation that I ever had with a client where I would say, it's a little bit illegal, but, have at it.
That's the difference between legal and finance, right?
But that's also why, perhaps legal isn't necessarily the ones driving the innovation, but kind of staying in the background to try to make sure that the right guardrails are put in place. So I think there's room for everyone in this process, but definitely we need the innovators out there to move things along and create progress.
It's all right. I'll let you come to the party with me.
Sounds like a plan.
So I have a little bit of critique because, if you read carefully between the lines, the pilot data, it was commissioned completely by Doctronic, so all of the results are reported by Doctronic. If you read Stat News article, they actually covered it pretty well. They reached out to the YODD AI committee, essentially, to their head of AI policy, and he confirmed that it was Doctronic's numbers. They're still doing their independent review, so I prefer to wait until independent numbers come out, because obviously Doctronic, reported all of their nice, shiny 90% numbers. But in general, I think the future is sort of autonomous. In this case, prescription, but just AI in general, as long as it's guardrailed and safeguarded, I'm all for it. But again, this particular pilot, I got almost nothing from it, because again, it's super biased, and we have to wait for some confirmation.
All right, flip side, have you ever used HIMS?
Use what?
Have you ever used any of the products? Have you ever tried to get a prescription at HIMS?
Electronic? HIMS, no, I haven't used.
Pretty automatic. I don't have a lot of confidence. There's a doctor on the other end saying, yeah, she needs minoxidil, let's give it to her. I think this is just professionalizing it and allowing it to be a solution for the broader healthcare community.
Maybe it's kind of so seamless, I'm not even realizing it. But no, I mean, for him, I think there's got to be somewhere somebody checking. It's unless they're doing something unofficial, I don't know.
Again, we're in the illegal space for some reason. But yeah, if you're subscribed to Sergei's Substack, he doesn't trust any numbers before he checks everything. But yeah, let's move on to the next news. I think the same week that SpaceX announced their IPO, this news got lost a little bit because everybody was talking about SpaceX, obviously. But Oura, I think, a great company. By the way, who has an Oura ring? Who has a ring of any other competitor in space? All right, so it's not only Oura people here. All right, so Oura filed for IPO. I think that's a huge accomplishment. On our podcast, actually, in December, I said that this is the company of 2025, and I'm excited that they went public, going public this year. But also there are rumors that Apple might be interested in purchasing Oura, because I think it makes a lot of sense for them. So interesting to hear your thoughts about this.
So I was actually really surprised when I heard the Apple rumors, because if you look at their M&A history, it doesn't really tend towards buying any sort of product. They usually like to buy some sort of tech behind a solution they can put in an Apple-branded product. But hey, weirder things can happen. You're really excited about the Oura IPO, huh?
I am.
Were you excited about the Fitbit IPO?
No.
I look at the history, and I mentioned this before, of all consumer tech and all these different consumer tech devices. I could rattle off a ton more, like the GoPro. Like everything has been kind of a fad and then got superseded by some other tech, and the valuation is maybe a little bit bold. If you looked at Fitbit's market cap when they came out and they had an initial pop after the IPO, it was $10 billion. If you looked at the valuation, it was 6 times revenues, 60 times PE. And if you look where it was taken out by Google, it was a not applicable times revenues because times earnings, they didn't have earnings, and it was 1 times revenues. So I look at that kind of degradation in value, and I worry about the parallels with Oura. I think they're going to have to really lean into having a stickier customer base. They've leaned in a lot to women, so I think that's really interesting. We'll see if they're able to break the curse.
I thought I was going to be critical, but everybody else.
It's not always Mary Sunshine.
Let me be positive then. I have to change what I was going to say. I was looking at, of course, there's no official financials. It was a confidential S1 forum. But from like various sources reported in the past, I mean, I don't know, like multiple sources claim they're profitable. I don't know what it means, but like just the fact that they're profitable.
But how profitable? They're a device. If you look at margins across most device companies.
So if I have like one guy profitable, I'm happy about it.
Subscription.
I got to fight with them. All right. If you look at margins across the average device company, I think one of the best margins in a device company is Apple, right? That's expected. They're going to have a really good margin. I think it's like 20 or 30%, but it's generally single digit. So yes, they're profitable. They structurally should be profitable. They're selling a device. But the question is, what is their incremental margin?
This proves my point. If they're making money with tiny margins, I mean, this probably tells something about they're doing something right. I don't know.
No, that's not how to think about margins. That's not how margins work.
Okay.
If you're selling a device and it has a high cost of goods sold, right? You're selling something that's a physical product. You can only be limited in your margin. You can never really get to like that software margin that I remember Teladoc had a pretty healthy margin during the pandemic. You cannot get that with higher volume. It's always sort of structurally limited.
They're saying they have positive net profit. Like what does it mean? I mean,
positive means I sold you a device for more than the cost of goods sold.
Okay, so after cost of goods sold, they're making money. I mean, I'm happy for them. I don't know how they do it, by the way, but so I've read they have 5.5 million customers at a price point they're at. I mean, this is amazing to me.
But there's subscription. So it's not
subscription is like 20% of this.
If I can interrupt for a second, the discussion about profits and money and so on. We've talked for 2-3 minutes about this technology and this device, and we haven't asked the question: is it actually making Americans healthier? Like, is measuring ourselves to death actually? Does it matter? Is this thing any good? I don't know the answer to that, but I just kind of feel like when we're talking about devices and direct to consumer various technologies, is someone asking the question, like, do we need it? Like, is it actually making us healthier? I don't know. I'm just a lawyer.
So this is a really good point, and I think this is kind of the blessing and the curse. If you look at Oura versus Fitbit was not a high-end product. Like, it wasn't super expensive. Oura, I don't have an Oura ring because I'm a little more conservative in how I spend on my devices. Also, it didn't really fit my finger. But it is inherently a wealthy product. You're not going to see this outside of the biohackers of the world, the digital health meetups where everyone's wearing the ring so they can go and find their heart rate. Nor do you find really monumental stuff. You could argue that women, it's more interesting because they have a lot longer to baseline. You take at least over a month because you've got your cycle. For a lot of men that have stopped wearing it, I've asked them why. They said, well, I knew I was getting bad sleep when I was drinking. I'm not stopping drinking.
Exactly, that was my point. I was trying actually.
You're not gonna stop drinking?
Maybe, yeah. No, my point is, you're absolutely right. There's no health story here. To me,
Hold on. Oura is taking another step in its move from wellness to healthcare by giving users direct access to a physician. Oura announced a partnership with Console Health, bringing AI-enabled primary care directly in the Oura app. There's your healthcare.
So what? They're not a ring company anymore. Like I don't like this pivots. Like all of a sudden, they haven't even been IPO, and they were like
that's expansion from wellness. To
I don't know that. But as of now, so this is like brand new business. They haven't even started yet. So as of now, their main business 80% is from actual hardware and 20% from subscriptions, roughly, give or take. I mean, who's buying? Like 80% of you guys don't have any rings, and I mean, it's kind of like my story. It's like, you know, in the past, I guess for the first time, they're saying, oh, we're actually forward looking with this Ring 5. They're like, oh, this is like the smallest and the smartest ring, right? We're kind of like looking forward. So what was happening with Aura 4? Like, you were not looking forward, like, what the hell's going on? so to me, it's like, it's almost like a Tesla story. Remember when they started selling, everybody's like, oh, you know what the hell it is? It's like so cool. It looks so cool. Like everybody's buying because it's cool. So I feel like all the men are buying rings for their girlfriends or whatever, you know, lovers, just because it looks so cool, you know. Once the dust settles, it's like, you know, like why am I wearing this? Like I'm getting up in the morning, like I know I didn't get any sleep. Like I don't need a freaking ring to tell me I didn't have any sleep. So I think there's a big population that thinks like that. So once we get, so I mean, it's interesting that they're making money, but after the IPO, I'm actually curious to see once that first sort of cool wave comes off, like if they can still kind of consistently deliver.
All right, we'll find out soon. But actually today, I heard the name Fitbit more than for the past 3 years. I don't think it was on the news. So, but it is on the news now. So let's get to it. So the Google Health app is now a single app solution. It's entering a new era. That's from their press release. Fitbit app is entering a new era and leveling up as the Google Health app. With the new app, we're bringing together all of your health data from wearable devices, Health Connect, Apple Health, and your medical records into a single place. You can get a holistic view of your health, and soon we'll be able to securely share your data with friends, family, and doctors. What do you guys think? Fitbit is back.
Well, all I know about Fitbit is that when I read the news a couple of years ago at this point that they were being acquired by Google, I took my Fitbit off and I haven't used it since. So that's been my attitude about it, and it's not going to change.
Wait, why? Why?
Well, you know, once you switch from having a tool that you could just track whatever the number of steps you take in a day or whatever it is that you want to track, to knowing that your data is just becoming the product and it's being used for somebody else's benefit, I just didn't see the need for me to participate in it. That's probably perhaps a minority opinion, but I've stuck to it for now.
All I'll say is you were surprised to hear Fitbit. I was surprised to hear Google Health.
Yeah, so this is, by the way, I think for the first time, Google basically openly said that, oh, you know, we're gonna move Fitbit to our sort of like more like bundling, I guess, version of Google Health. I don't know, like to me, like if you look at the history of Google, I think they're in business of kind of like throwing things at the wall and see what sticks. And I think Fitbit was one of those propositions. I don't know if they still know what they're going to do with it. I mean, at least like I didn't get any strong signals. In the same announcement, they were talking about Symptom AI, which is like completely different proposition. It's like clinical based versus Fitbit is wellness. So I'm like, so are you doing wellness or clinical? So I think they're basically throwing everything at us and just, you know, see what happens. So we'll just see what happens. But actually, compared to Oura, this is like a really affordable proposition, by the way. You can get it for free, or you can get Fitbit Air for like $99, which is with no subscription. So this is actually, if you want to wear something, this is probably, you know, things to do, things to wear.
Anyone is wearing a Fitbit right now? All right, Fitbit. Nice. Well, talking about throwing to the stick and to the wall and what sticks, they also announced a personal health companion, Google Health Coach.
Oh yeah.
Last October, we set out to build a new kind of coach, available 24/7, backed by science, and designed to adapt to you and your health needs. It's a fitness trainer, a sleep coach, and a health and wellness advisor. Over the past year, I've met so many startup founders who are trying to build a health coach, and now do you think Google's gonna kill all those startups?
I don't know. I mean, this is, by the way, like a direct hit at Oura and everybody else. Like, I haven't heard them like coaching for sleep or something, you know. So, I mean, we'll see what happens. I think, but I mean, they have a lot of money, so I mean, we'll see.
No one wants a digital health coach. I try all of these different health tech companies when they come out. I do.
Why do we need a health coach when there are GLP-1s, right?
So I put my dad, for example, on Livongo, and he called it the daughter nagging app. He was like, "This is great. Instead of you nagging me, now my phone does." I hate it. I don't want my phone to do that now and nag me as well. I mean, this is one of the values of medicine and in-person care, is that you feel like another person is invested in your health, and so you feel obligated to them. It was a lot easier for my dad to ignore the daughter nagging app versus ignoring me.
All right, let's move to the next one. We already talked about Doximity a little bit. They did not do well on the earnings, I assume, but they had a lot of announcements this month. The Doximity Clinical AI Suite is our most significant step yet toward the mission, bringing together Ask, is their Doximity, former name of it, Scribe, and Dialer, to reduce administrative burden and give clinicians more time for what matters most. What do you guys think of this news?
I mean, it was a lot of sort of marketing stuff. I don't think there was any meat in it. I mean, there was actually, with the exception of Prescribe, there was no like new announcement. But yeah, Prescribe with what is it, Photon? This company. It's kind of their new thing. And I've written about it. I actually spoke to quite a few people at Doximity. Maybe I'm biased, but like I was actually happy what I heard in terms of the research they're doing and in terms of, you know, how they're fine-tuning their models. Obviously, everybody's using foundational models, but the way how they apply it and post-train them, and I think they're a pretty good team. So, you know, I know like how market reacts, but in the end of the day, it's the people. And, you know, I kind of like the people. I think partnerships, you know, the same announcement was like this company that partnered on Scribe and Ask, which is former DocGPT, was the All Day company. Photon, obviously they partnered on data side with Pathway. Was the Pathway Technologies. I think it was a pretty good move because it was like also a niche player. I feel like they're part of that kind of digital health, you know, disfavor story. But at the end of the day, I kind of believe in that company, and you know, unfortunately, perhaps timing it is because of the kind of like a hit on the earnings, and at the same time all these legal cases from open evidence can happen at the same time, but I think the fundamentals are there, so we'll see.
As a finance person, I always think about the real estate that Doximity has to sell. And if you boil down what their business model is, it's really a paid social business. They have a social network. They have a lot of things doctors can use. It gets you scrolling on the social network. And then they have real estate they can sell to your eyeballs. Paid search is a huge business. We actually often say paid search and social when we're looking to advertise. That's a huge unlock.
Do we have doctors in the room who use Doximity?
Don't use Doximity.
Don't use Doximity?
Did you try it? And
Their team, it's terrible.
Uh-oh. Everybody agrees? Who raised your hand?
Well, our provider really like it. Well, we only use the calling patient.
Dialer.
Two phones for that.
All right, interesting. And last move to the last news for today. Since we're Health2Tech, we got to talk about tech more. So Anthropic released Opus 4.8, and for the first time, Anthropic added a dedicated healthcare section to its system card. And Opus 4.8 scored 55.8% on HealthBench Professional, nearing GPT 5.5, which was like 1% higher. So Anthropic is in health business and getting closer to the benchmark. Sergey.
Yeah, I mean, usually it's not really a news, like as we were discussing before this event, all these companies kind of beating themselves on benchmarks. I don't know, I thought this one was interesting because, first of all, I think there are signs that Anthropic is kind of, going heavier on healthcare, which is a good sign. They just hired the CEO of Novartis to their board at the end of April. As you mentioned, for the first time, they're talking about healthcare in their new release of their new model. I kind of like in this particular announcement that they're using HealthBench Professional. You guys know what these benchmarks are? HealthBench Professional, no? Okay. One person. So real briefly, it's basically OpenAI decided to show how good they are in healthcare. So they created essentially a benchmark, which basically, think of it as like hypothetically speaking, as like a list of questions, but they're like complicated questions. So in the first one, it was basically conversations between patients and doctors in HealthBench. This was last year. And guess what? They used their model, OpenAI, in that case, to kind of see how well they're doing. So they've created a benchmark. It's their own model that evaluates how well particular outside model did. And guess what? When you evaluate, whatever, GPT 5.5 and GPT 5.4, well, things are going to look good. So that's why I'm always skeptical when it's like the same company produces the benchmark and the model and saying, how good we are. This case, Anthropic took OpenAI's benchmark, their new one, which is a little bit high quality because they actually use specific physician tasks from anywhere from consultation to research to writing the treatment, for example. So this was a little high quality. So they're saying, can we beat OpenAI in their own benchmark? And they actually almost did it. So numbers were like 54 versus 55. So I think they're actually doing it the right way, and that's why I kind of like this news. Thank you.
I think there are probably like 1 billion prompts regarding personal health done every day. And I'm just curious, who does ask health-related questions about your personal health, a chatbot? Would you prefer Anthropic? ChatGPT? Gemini? Or who's asking health questions to Grok? Wait, why laugh it?
But I think maybe one of another interesting question is to ask who is using them in lieu of calling the doctor's office, or who is using them as a starting point in order to have a conversation with the doctor. So what are the use cases that are being developed from the usage of these models, and how can it then be used to help the clinicians to provide better care more efficiently? Because the clinicians are undergoing so much pressure, seeing too many patients. They don't have the time to really devote their skill and expertise to treat every patient the way that they really would have liked to. Can that actually be helpful to the clinicians? And I think that's where this is going. And that, I think, to me, that's what's interesting.
I agree, but let's move to our last piece. We added last episode this fun game, at least I think it's fun. Thumbs up, thumbs down, talking about some of the latest fundraising rounds in private sector. We talked about public already, now let's talk about private.
Can we have the audience participate?
Of course. So yeah, if you know the company, what company is doing that I'm going to announce, you can also put a thumbs up or a thumbs down if you think it's a good investment and you like the company and you think it makes sense. So let's start with the first one. Company is Garner Health. I'll read what they do for people who do not know. It's a digital care navigation and doctor analytics startup. They secured a $100 million Series E funding round, bringing its valuation to $2.74 billion. So what do you guys think?
I'm gonna say up.
All right, lots of thumbs up and down. Why don't you like the care navigation platform?
Okay. First.
I don't think I like care navigation as a category.
Why?
I mean, care navigation tends to be very human heavy. I think we just talked about everyone using ChatGPT or all these different Grok, for example, in order to go navigate their health. I think that's going to kind of displace it, if you will. And if you look at the arc of Accolade as a public company, it kind of proves it out.
All right, let's move on to the next one. Sergei, your favorite, Commure.
Oh yeah.
Commure raised $70 million in a funding round at $7 billion valuation. General Catalyst, who is mostly behind Commure, Hemant Taneja, that's how you pronounce it, posted on LinkedIn that Commure needs to become a $100 billion company to fulfill its potential as it attacks U.S. healthcare, $1 trillion in administrative spending. Kind of ambitious. So what do you guys think? Stephanie? Thumbs up?
What's wrong with Stephanie?
I did it just to piss you off. No, look, I mean, it's not sexy in any way. Nothing Commure does is sexy. It's boring back-end stuff. But you could argue having one company doing all the boring back-end stuff and having it speak to each other, there's a lot of value in it. And there's a lot of trash companies in it. Augmetic's not a good business. But I do think the direction they're going in and the fact that AI helps them create a better business, like there's an opportunity there that no one else is really scaling up in order to meet the need for.
Is it an opportunity for $100 billion?
That's a bold TAM, Cotton. Let's see how it plays out.
All right. The next one is Nourish. It's a virtual metabolic.
Wait a second, can I say something or not?
Yeah, go ahead.
I thought you're gonna stay quiet on this one.
No, I just don't like the company. So first of all, like whoever works in Commure, like the fact that their internal motto is M&A is in our DNA, and you basically trying to build the company through acquisitions. To me, it's an unsustainable model. Obviously, all these rounds are completely useless because this is Hemant's baby. So of course he's gonna create whatever that letter is, C now or whatever. It's gonna go all the alphabet. I mean, to me it's unstable. There is.
I think it's D-3. I think it's a D-3.
D-3, yeah. What the hell is that? I know.
What's wrong with multiple acquisitions? It's a strategy.
It's unsustainable. As I mentioned, it's whoever reads my Substack, a lot of them had conflicts of interest, in my opinion. And there are legal things I cannot talk about, but it's just not a good company.
All right. Nourish is a virtual metabolic clinic and nutrition platform, raised $100 million in Series C funding. The round brought the company's total funding to $215 million and valuation $1.75 billion. Thumbs up, thumbs down?
Indifferent.
Indifferent, okay.
Is that how the game works?
Everybody seems to be optimistic about Nourish. Why thumbs up?
Well, from what I'm reading, I like the fact that they're basically positioned themselves as kind of integrated play into GLP-1. So they're saying essentially, like one of the things I've read is that and plus they're actually, of all four here, they're actually profitable. So that's another thing. But the first thing is that they're saying, I think they actually had some studies that basically, a lot of patients that kind of phase out of GLP-1s after 12 months, sometimes 18 months, but like relatively short time period. naturally you cannot just phase out GLP-1 completely, but they're like, well, I achieved my goal, like, what do I do next? So they provide this continuation. So to me, it's very appealing, basically through this dietary and nourishment programs, essentially the right way to get off GLP-1s when the plan is over.
All right, and the last one, Forus, actually, they just renamed themselves. They were Tandem. New York-based health tech company raised a massive $160 million funding round, pushing its valuation to $1 billion. The AI-powered platform automates insurance authorizations and prescription processing, dropping the median wait time for patients to start critical therapies, from over a week to just a little over a day. 160 million. Sergey, what New York based? You gotta support New York based companies.
Thumbs up and
Yeah, I'm sorry.
team player.
Again, this is like we throw on these companies, but most people haven't heard about them. But this one, when I read about them, I didn't see anything special. Like what is back office automation? What is their mode? There's big competition. I know they got quite a bit of money. And the second part, they're heavily dependent downstream on pharma revenue. And I've heard they're saying in one of their promotions that basically we're getting more patient, something like per session or per therapy or something faster. So there was a word faster, which just kind of didn't sit with me very well. And I started Googling about it. And so this is almost like a trigger word for the DOJ. Basically, when they're saying pharma is trying to make quick bucks with some, automation, this is anyway, it's just, maybe it's some kind of association, but I just didn't like it.
All right, any other comments? All right, this is it for our part, so thanks for joining our live recording.